Hello, and welcome to our market alert video for the week ended February 11, 2022. And I want to wish all of you a very happy Valentine's Day, since I probably won't talk to many of you before then. So happy Valentine's Day to you and to your loved ones. This week is a historic week. Inflation has heated up to the highest level since 1982, and 1982 is well known for being the worst inflationary period in our country in the modern era. So this is historic times of inflation. And what does it all mean? Well, basically, all eyes right now in the investment world are on the Federal Reserve of the United States. And everybody now, all the talking heads that I've watched have been saying that they are behind the curve. They took too long. Now they got to play catch up. They're going to raise interest rates 7, maybe even 9 times this year. And they're going to have to catch up for lost time. And if they do that, they're going to do it too fast, and they're going to break something, and the economy could crash, and all kinds of bad things could happen. Now, is that possible? Yes, it certainly is. In fact, as we've talked about in previous messages to you, we've outlined how, for example, the Great Depression, many historians believe, was caused by the Federal Reserve, because they raised interest rates, thinking that with higher interest rates, people would have more money on their investments to spend. That would help the economy. Well, they found out that it actually did the opposite and sent the whole economy crashing down. So now, in bad times, they do the opposite. They lower interest rates. But be that as it may, is it possible that the Federal Reserve could make a policy mistake this time around? It is. And if they do, they could break something, because the economy is very fragile. Everything's interconnected. And if you upset the apple cart in one area, it could trigger a big bad thing everywhere. So it's certainly possible, and we'll be watching the Fed very carefully to see how they handle this going forward. Now, having said all of that, do we think it's going to happen? The Federal Reserve said in all of their communications that they were going to let inflation heat up so as not to get in the way of the economy recovering from the pandemic. Well, and they said, if inflation goes beyond where we want it to be, we're okay with that, because our first priority is going to be to let the economy heal. Now, of course, everybody's saying that they took too long. They should have started already. The economy had already shown signs of healing, and they're behind the curve. Yes, most likely you could make that argument. But is the Fed going to break everything? We don't think so. We think that they're going to be very measured about it. We think that they are going to announce well in advance what they're going to do. The markets will adapt to that, adjust to it, and we should not see a massive upheaval. Now, of course, we could be wrong because they could do it too fast. They could succumb to pressure from the markets to increase interest rates by 1%. We had one of the Federal Reserve Board governors, Bullard, say that this next meeting they should raise interest rates twice as much as they've announced that they are thinking about. We don't think that's going to happen. It needs to be in a measured, organized way, so we'll see. But that is the biggest risk. In the meantime, we do believe that our forecast of Dow 40,000 will still come to fruition. Our way of thinking right now is the Fed is not going to break the economy, but they could. So what does that mean? It means that we're glad we have our invest and protect strategy, because if things do go wrong, if we have a war in Ukraine, if the Chinese invade Taiwan, and who knows what else could happen, all of those things could cause a great deal of upheaval and a downside on the market, and we always want to be ready to protect you from that. So that's why we have our strategy. It gives me peace of mind to know we have it, and I hope it gives you that same peace of mind as well. So again, if you want to worry about something, worry about the Federal Reserve, but better yet, let us worry about it so that you don't have to. So thank you for watching this video. We hope that you are well. We hope that all is well, and that you are enjoying your second childhood without parental supervision. And we will talk soon.